And good evening, everybody. This is Michael Filighera. I'm with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Wednesday, September 15th, 2021. The market did not go down and make a new low this morning as I had anticipated. It got close. In the Globex session, it got down to 4427.50. And I was looking for it to come below 25.25. Now, that doesn't really upset the apple cart at all. It would have made a cleaner 5 down, but nonetheless, I have marked this as the completion of that minute 5, and then in turn, the minor wave 1. So that does complete 5 waves down. As much as it looks the way it does, it is appearing to me to be a complete 5, which would suggest that since this is minor 1, we're now involved in a minor 2 bounce. And that will be an ABC structure. So this structure here, this small, in fact, I'm going to go down to the 30-minute chart so I can open that up a little bit more. This is all 3 waves. Now that could be 1, 2, 3, 4, 5 for a wave 1. Doesn't really triangle up, but acceptable. Or A, B, let's see, A, B, C. And that would make it an A wave, and this would be the B wave. And in turn, that then starts a C wave up. Or 1, 2, and this is 3. I'm not favoring that one. I'm favoring more that what we're going to get is this is A, this is B, and that's 1, 2, I could say 3, 4, 5, which would complete it. But I don't feel that that's the case. I'm going to be more comfortable with 1, 2, 3, and then we get a 4, and then we still got 1 additional rally, which might take us up to 79, which would be next resistance. And we actually have some right here at 73, which is where it's basically hovering around, got a little bit below, a little bit above. Now, outside of that, our next resistance, let me go back out to my hourly because that's kind of looking a little bit strange. So I have to figure out what we put in. Those aren't going to work anymore. That's the larger. Excuse me. Let me take those off and put on some different ones. So we'll go from that high down to that low, and that'll tell us where we should be getting our wave 2. All right, back down to the 30. So we reached 382, which sat at 72.50, we'll call it. Our next one up is the 50% retracement. Also for a wave 2, not uncommon. It's pretty common actually. And that will come in at 44.87. And then we have one more, 618, also very common, up at 45.01. So it could really give the premise that everyone thinks, okay, declines are over, we're now going up, and we're the rally's back on. And that's the deceptive nature of corrective waves, particularly wave 2. A second wave can and does often retrace at least 62%, if not 70%, and possibly even as high as equaling the entire sequence. And if that's the case, well, then we're heading up basically almost close to the high. So unfortunately, this stays the count, and we can put in an alternate view, and that would just be taking us back to where this completed minute 4, we're in a minute 5 advance up to new highs. But I gave you my reasons for changing the count yesterday. Those remain valid today. In fact, we continue to see rejection. This one, no, the market did not reject it at all. In fact, it participated wholeheartedly in pushing this up. And again, what got it started was Microsoft really basically staying higher all day. And then eventually the NASDAQ joined the party, and the rest of the five or the major stocks that participate in the NASDAQ being pushed up strongly jumped into action. And that was Amazon. Apple, not so much, but it was Amazon, it was Google and Intel and Microsoft and NVIDIA and Netflix, a very small amount. And then Tesla finally joined the party at the end of the day. Now, that being said, I would expect that in a wave two advance or a wave two corrective move. Because there's still, we have to remember that we are really topping in a process that has been underway for several months. So for the market and all of its participants to be convinced that the tops are in and we are now going down is going to take some time. So we still have a very large mentality out there of we buy the dips. And so they all were sitting, waiting, basically, you could think. And that once they started to break, they all jumped back in. They all came running, buy me, buy me, buy me. And that was pretty apparent when we saw just wave after wave of buyers hit the exchanges. I want to say hit the floor. There is no floor anymore. So in any case, I am going to stick with what I am counting and how I am counting it. And because these, it may have all been corrected, but I didn't like the size of it. That's what really kind of tossed me over the edge to say, no, I don't think so anymore. But it did not break any rules in terms of what the whole thing should look like, because wave one was all the way down here. Now it got close, it got within 13 points of doing that. But just the fact that this would be correcting this third wave, if that was still labeled, this up here, coming down that far in a 4, no. We had support here, and another level that it really should not have gone below here. So again, yesterday I was talking about how it dropped below 44.71 and then again below 44.62. And that's why I said, no, I believe this is now going to be, a first wave down. And that's how I've labeled it. And that's actually what I'm going to have to stick with, unless the market begins to break. And actually, because of second wave can go up and really retrace nearly 100% of wave one and then turn and just collapse, I will ride it until proven otherwise. Now, if this just ends up being a straight 5 all the way up, well, then that's going to help me change my mind a lot sooner. And what I mean by that is, if indeed this is a minute 5th wave going up, it's going to come in 5 waves, not an ABC. So I would then have to figure out what was this, because that certainly is not impulsive. So I can't say 1, 2, even 3. It doesn't fit. It doesn't look correct that a wave 1 would be, a series of 3s. That's not how it goes. But I am going to leave this in as A, B, and we're working a C wave. The C wave may have additional upside. Again, we have 44.82, we'll call it, which is where the 200 intersects. And then we have 87, and then we have 45.01, 45.02. And I believe that should contain it. And again, then the market would be expected. My expectations would be that it will roll over and begin a third wave down. Now, these all have to also fit characteristically. So wave 1, it does characteristically, if we really look at the characteristics of a wave 1, it's coming off of a major rally that's taken years to get here. So it's going to be sloppy. It's going to just appear to be, battling its way all the way down. And that's pretty much what it did. So that structure fits. The wave 2, also would fit to go up nearly, go back above 4,500. That would fit because we have this whole thing and say, oh, it was just a pullback, it was a dip, we bought the dip, and now look, we're in such a great position, the market is rallying again. So that's where we're kind of getting into the deceptive parts, and also just how this long-term topping process plays out. Again, it's going to take some time to roll everybody's thoughts from we buy the dips because there is no downside, there's no danger, we're just going to go up, up, and up, to, oh, we are going to go down, we are at that point. And unfortunately, quite often, that doesn't come until the third wave. Once that third wave can begin, we reach the 3 of 3 stage, and that's often referred to as the point of recognition. That's the point where market investors, participants realize, oh, we are going down. Or in inverse, if it was during the bull phase, oh, we are going up. And what I can show you is here. This was the point of recognition. From there all the way up to there. That was the 3 of 3. And in fact, the way I'd labeled it before, it actually was quite extended. And it may go back to that count. So I can't deny that that is not a possibility, because it is. But for right now, that is a 3 of 3 move on the way up. Because don't forget, this was the end of the fourth wave correction. So up to that point, the market was feeling, oh, we're going down, we're going down. And then suddenly it just stops, it blasts, and then it blasts in the third. And so those were very powerful rallies. And many of you were there trading them right along with me. And they were powerful, and you could not get in the way. And if you did, you got rolled over like a steamroller, and it just flattened your position, it flattened your account, and many times blew you out. So having put all that into our big mix here, for tomorrow, I do think we're going to continue to see some upside. And again, these are our resistance zones. It was a fairly decent rally again today. And the market ended up 42. That's pretty strong. The Dow putting on 275, even the NASDAQ caught the wind at the end of the day and ended up 128. So decent rallies, tradable rallies. You definitely don't want to get in the way here. So again, we may see this. And as you trade, we don't get married to any particular side, nor should we be considering the who, what, where, when, or why. So part of trading is being able to look at what's in front of you, read the price action, read the bars, the charts, and understand that they're all connected and they're giving you the roadmap. They're giving you the path. When the buyers come in, these bars are large, very bullish golfing bars. And then these didn't see the follow through that you'd expect. That's a topping tail. Did follow through the next bar, but not as much. That was a topping tail taken over by a bullish engulfing bar. So it's staying on your toes and in tune with what the market is doing. Because as this started to go, it was evident and you needed to cover your short pretty much right there. Because this was expecting follow through to the downside, and it gave nothing, a tick, maybe two, and then turn. And as soon as it broke back above that 200 on the 30-minute chart, that was telling you, get out of the way. If you're short, get long. And that pretty much held up for the balance of the day. Now they're again coming in, buying now, and it is still suggesting that we have higher levels to reach. But I want people to understand that when you are trading, let your moving averages guide you. All of these moving averages, except for this on the 30-minute chart, where we need for this rally to really catch hold and propel this market to new highs, that 50 and the 20 and the 8, which is now just, need to move above It's the 200 on the bottom, then the 50, then the 20, then the 8, then the 4. That's the structure. And right now we don't have it. So again, I'm sticking with my count that finished minor wave 1. We're in a minor wave 2 advance, a correction, counter trend, because I believe the trend has changed. And once that's done, the market should roll over again and start performing like that. Rejection, rejection, rejection. And again, that's when I would expect to see some acceleration to the downside without these massive rallies coming in. And not that we won't expect rallies, because we will. Remember, wave 2 corrects wave 1, wave 3 corrects wave 4. So as that 5-wave sequence unfolds, you're going to have 2 bounces within it. And then as each one of 1, 3, and 5 subdivides, you're going to have 2 bounces within that. And then if there's a subdivision within the wave 3, you're going to have a total of 4 bounces within it. So understanding the Elliott wave is our building blocks. And so they repeat themselves and they build out 1 degree and they build out. So we got 5 waves down of minute degree, and that finished minor wave 1. So now we get 5 waves down of minor degree, and that's just going to finish intermediate wave 1. And then we get 5 waves down of intermediate degree. That's just going to finish primary wave 1. So we have a lot of downside in front of us, even before we get a substantial bounce. Now, the only thing that can happen is if we're coming down and we finish 5 waves down of minor degree, but that actually forms an intermediate wave A. Then we get a B wave, and then we get a C wave. And then, so instead of being 5 down, 3 up, and 5 down, it's still going to be 5 down, 3 up, 5 down, but it's going to be labeled ABC instead of 1, 2, 3. But we'll get to that as that unfolds. That's jumping out into the future that hasn't happened yet. Right now, we're sticking to what's in front of us. So minor wave 1. So I'm only looking for minor wave 2. And quite frankly, it's looking pretty well done. It may get up to here, and then I'd expect it to roll over, or even up to that higher level of about 4,500. I'm still going to be looking for it to roll over. Now, whether that happens tomorrow or whether that happens on Friday, yet to be seen. So for tomorrow, look for some follow through upside. I don't think we're going to get the same intensity that we got this morning or even into the afternoon, but it may feel that way as we trade on our smaller time frames, a 1 and a 2 and a 5-minute chart. But again, I'm looking for resistance to hold and for the market to then turn. I'm also going to be paying very close attention to, on the hourly and on the 30-minute chart and the ones lower, what the position of this 200-day moving average is. If this continues to be above all of these, I'm not going to have a whole lot of confidence that this rally is going to go anywhere. So that's what I'm going to be looking for. Now, downside, these are our support levels coming back off, our moving averages, and then that, and then 44.25. And then I'd have to move back out to what I put up previously. And I'll do that now, but it's going to actually plug up the chart, but I'll put it there. It should come out a little bit more to the left. So that would be here. So as the market goes up, when it comes back down, here we still continue to have support, depending on however where it goes, at this 44.72 area. Then we have it at 44.48, 44.25, 24, which is this low. And then we have 44.06, and then it breaks. We should find some here at this low at 43.71. But ultimately, this is what I'm looking for, 43.47 to complete possibly wave 3. And then we get a 4th wave, and then I can start moving out our support levels. But right now, I'm only covering support levels between the low of wave 4 and the high of wave 5. But this is where I'm going to leave it for right now. Now, tomorrow, additional upside, followed by a start of the next wave down. Whether that all comes in tomorrow or not, I don't know. It could be a very slow day. It could be an inside day, as we just kind of hold and digest what we've done so far. So I'm going to leave it right now. The next update will be on Thursday, the 16th.